In the hours following the U.S. and Israel's strikes on Iran, the Islamic Republic has retaliated. Iran has launched missile attacks all across the region. The BBC reports at least 3 tankers have been attacked, and in an extremely oil-rich area that is a hub for international trade, the threat of a longer war is sending shockwaves through their economy. As much as a third of all of the world's oil shipments pass through the Strait of Hormuz, which of course is just off Iran's coast. The New York Times is reporting that traffic through the strait dropped as much as 70% as of late last night. So anything that would close the strait or make it harder for ships to cross could send oil skyrocketing. And with oil prices spiking 9% in early trading as Asian markets begin their week, the markets are already warning about the potential consequences. Joining me now, the best of the best, Halima Croft. She's a managing director and global head of commodity strategy and Middle East North Africa research at RBC Capital Markets. We need your help tonight. Let's start with how quickly could the effects of this conflict impact consumers?
Well, if we talk about oil prices and retail gasoline prices, we could feel the effects very quickly if the Straits of Hormuz is not reopened. Now, the Iranians have not physically blocked the straits, but insurance companies, Western shipping companies do not want to send ships through the Straits of Hormuz when there's a risk of being struck by a drone, by a mine. They're choosing to stay out of the S-curve of the Straits of Hormuz, the very narrow waterways that Iran has ships that they could use to attack vessels.
So these ships, where will they go? They'll just sit in waiting?
They're just basically becoming a parking lot. And the question is, again, if this is an extended military confrontation, President Trump was apparently talking about a 4-week confrontation. If there is no plan to ensure safe navigation through the Straits of Hormuz, that is a path to $4 retail gasoline prices. That is the scenario that would be very problematic for the affordability agenda for the president.
Yeah, I mean, we've got primaries a day from now, and low gas prices is sort of the signature thing that the president hangs on when he talks about the economy.
That had been his signature economic accomplishment. And I think there was a view, because U.S. oil production had been so high, that this would only be a sort of a blip when it came to oil prices. But again, I think the problem is that if we have a closure of a critical waterway, or again, just nobody willing to go through there, there's not an offset in terms of additional supplies. You're essentially making Middle East production stranded assets.
How high could oil go, right? When we saw Russia invade Ukraine, we saw oil spike.
We saw oil spike. Now, well over $100, but we didn't have a physical disruption because the United States decided really not to sanction Russian oil exports. There had been fear of Russian disruptions, but that did not materialize. And the United States released significant quantities of oil from our strategic stockpiles to help bring down the price. Now, one problem now, Stephanie, is that we've essentially drawn down our strategic stockpiles by 40%. We haven't been building it back. So if we do get to, all eyes should be on the straits, if we don't get a reopening of the straits, we have less barrels to be able to bring onto the market to offset a disruption.
Could this lead to another jump in inflation? Like, how might that happen?
Well, again, think about oil. Beyond sort of gasoline prices and transportation prices, think about oil, also natural gas, or significant quantities of liquefied natural gas that go through this strait. That would be very important in terms of anything that uses energy in terms of production, obviously transportation. But beyond that as well, Stephanie, think about the airports that have closed in the region. Dubai Airport, one of the busiest airports in the world, is closed. Airspace across the region is closed. So there are lots of transportation bottlenecks that could emerge the longer this conflict continues.
But are there workarounds, right? Like, I'm trying to compare it to tariffs, for example.
Right,
when the tariffs were announced, the markets have shown that businesses know how to find their way around it. You know, they avoided sort of the worst effects of what the tariffs could have done. Is there a workaround here?
So let's think about a workaround for the Straits of Hormuz. There are some pipelines that could potentially be used to divert some quantities away. But the problem is are those pipelines secure? So people would focus on potentially the East-West pipeline. That's a way that Saudi Arabia could divert potentially 5 million barrels away from the Straits of Hormuz. But the problem was in 2019, over the summer, you had Iran and the Houthis in Yemen launch drone attacks on that very pipeline. So is the alternative route secure in an active war zone?
Okay, so that's kind of what I wanted to get to next. Like, put Strait of Hormuz aside, how much could a regional war create all different choke points that affect global trade?
Well, I think the really interesting question is, again, if we think about the oil market, would we have to release stockpiles from Europe, from the remaining barrels in the United States? Because, again, you could say, well, can't OPEC produce more? That has been the big question, because we had this big OPEC meeting today, and they announced they were going to increase by around 200,000 barrels a day. Yes, they could increase more, but there might be limits to how much more they can do. And it's all a moot point if you can't get your barrels out. So there are some workarounds, but not enough to offset this critical choke point. So it's not a perfect tariff comparison.
When markets open tomorrow, when you are all on the trading desk at your seats, what's the #1 thing you and your team are focused on?
We're focused on what's going to be the duration of this conflict, because, again, if it's a short conflict, if it's basically similar to what we saw in June, remember the 12-day confrontation between the U.S., Iran, Israel, the economic impact of that was pretty minor because it was a short conflict and there wasn't a lot of disruption. So if we follow the playbook of June, you can say we could have, temporary problems, but they should abate. But again, listening to your previous guest, if it's going to get worse, and there's not necessarily an easy off-ramp, I think we do have to prepare for more economic problems, at least over the next weeks and even potentially months. Again, duration's going to matter. How long are we seeing this conflict continue?
And doesn't this feel much more significant than what we saw in June? Or at this point, is it similar?
No, it's not similar, because in June, Stephanie, remember the Iranians targeted Israel. They did not target Dubai. They did not target tankers. What's happening now is, faced with an existential survival threat, the IRGC, the Revolutionary Guard, the regime remnants are basically trying to raise the cost of American action. They're trying to internationalize the pain of everyone for supporting this. So again, what's different from June is the Iranian response is wider. It's not contained. So that's why I say it's a question of how long does this last? If it's a short, multi-day, 1 week, these problems will abate. But when we hear the president talk about 4 weeks, then you say, okay, what's the plan for the workaround? How are we going to deal with these logistical challenges? Because again, we call them choke points for a reason.
Then, as somebody who analyzes every action and every word out of this president, does it surprise you that we've heard so little?
What I think is the question, if you had to ask me what my biggest question is, what did the White House think this would look like? What were they planning for in terms of the day after? Because remember, I started my career in the intelligence services, and I remember being a young analyst in Washington in the Iraq War, and there was an expectation that it would be a short war. What was the expectation of the administration going into the action over the weekend? Did they anticipate that the Revolutionary Guard would quickly fold? Did they anticipate that the death of the Supreme Leader would bring people onto the streets and it would be a seamless transition of power? What were they planning for?
Well, I, too, share those questions that Halima Croft has. I would certainly like to know the answer. Thank you so much.
Thank you for having me.